Hey everyone, welcome back to the World News Bulletin. Today, we're diving into a financial showdown that could impact your mortgage, your job, and even your grocery bill. There's rising tension between President Trump and the Federal Reserve, and we're going to break down what's really happening, what the Fed did last week, what Trump wants, and how it all ties back to the money they created out of thin air during the pandemic. This isn't about panic, it's about being informed. Just a few days ago, the Federal Open Market Committee, aka the Fed's interest rate decision team, met and unanimously agreed to keep the Fed funds rate right where it is, between 4.25% and 4.5%. This is the third straight meeting where they've made no changes. Why does that matter? Because President Trump has been publicly pushing for rate cuts. Lower rates mean cheaper borrowing, more spending, and a short-term economic boost. It also looks good politically if people are swiping their credit cards, taking out loans, and the economy feels strong. But the Fed says, no. Why? Inflation. Trump's argument is simple. Lower the interest rates and people will spend. Businesses will borrow more, hire more, and grow. The economy looks good. But here's the Fed's counter-argument: when money gets cheap, demand skyrockets, and that pushes prices higher. That's inflation. The Fed has one job right now: get inflation down to 2%. Currently, it's stuck around 2.8% to 2.9%, and cutting rates would likely push it even higher, maybe above 3%. So they're holding the line, despite the pressure from the president. This difference of opinion has created serious friction between Trump and Fed Chair Jerome Powell. Trump has even hinted at replacing Powell to get a Fed chair who's more aligned with his economic goals. This isn't just politics, it affects all of us. Consumers, businesses, investors, employees. The battle between inflation control and economic stimulation impacts every dollar we spend and earn. Let's talk about the core issue. Where did all this money come from in the first place? Back in early 2020, the Fed had about $4.2 trillion in assets. 2 years later, by April 2022, their balance sheet had ballooned to over $9 trillion. Why? Because the Fed printed nearly $5 trillion out of thin air and used it to buy treasury bonds and mortgage-backed securities from banks. This is known as quantitative easing, or QE. It injected massive liquidity into the system so banks had cash to loan, and interest rates were slashed to record lows. Consumers got stimulus checks. Businesses got PPP loans. And banks were swimming in cheap money. All this spending fueled record inflation by 2023, the highest in over 40 years. To reverse the damage, the Fed flipped the switch. Instead of buying bonds, they're now selling them, or just letting them expire, shrinking their balance sheet in a process called quantitative tightening. In their recent press release, the Fed quietly mentioned, "We will continue reducing our holdings of treasury bonds and mortgage-backed securities." Sounds boring, right? But that sentence means they're pulling money out of the economy. The same money they created from nothing, they're now making it disappear. As magically as it appeared, it's vanishing. So why should you care? If the Fed cuts rates too soon, inflation could surge again. Your groceries, rent, and gas could become even more expensive. If they wait too long, unemployment could rise. Businesses might tighten budgets or lay off workers. And in the background, the political pressure between the Fed and Trump is heating up. This power struggle isn't just about numbers, it's about your money, your job, your savings. So what's next? If the Fed holds strong and inflation comes down, they might lower rates by the end of the year. But if pressure mounts, from tariffs, unemployment, or politics, things could shift faster. The key is to stay informed. Make sure you're subscribed to the World News Bulletin for updates like this that break down the headlines and tell you what it really means for you. If this helped you understand the bigger picture, Hit that like button and drop a comment below. Should Trump replace Jerome Powell? Or is the Fed doing the right thing holding rates steady? Thanks for watching, and we'll see you in the next video.